evening to you. Welcome to the hub. Okay, yesterday was the mother of all days. We had the non-farm payroll data released for the month of May. Of course, for those of you that weren't aware of what transpired, we had about 272,000 jobs added to the US economy, which was far more than the 182,000 jobs that was actually projected for the month. So what does it try to explain to us? That was a strengthening force for the USD. The USD picked up beats across board. The Euro JPY plunged. The USD JPY picked up. The GBP USD crashed. And most especially gold went from about $2,385 per ounce, crashed to about $2,292 per ounce as at the end of market yesterday. So that's exactly what happened yesterday, and it didn't stop at the non-farm payroll data. We also witnessed a surge in the annual earnings, the average earnings of the US worker. It was projected that there would have been a 0.3% increase from about 0.2, but guess what? It went from 0.3 to 0.4. That means workers are actually better paid for what they do. It tells you that the labor force in the US is so strong, and when you have a very strong labor force, of course the economy is very on the robust trend. And that's exactly what played out yesterday, and to that effect you had USD strengthening across the board. Now, what does this imply? It implies that the Fed may just reconsider leaving interest rates as it is for longer. Of course, there have been these discussions of a possible rate cuts by this year. Of course, we've done the first quarter of the year. They haven't been able to come up with a rate cut. We've done the second quarter, which we just concluded. No rate cuts. Now we're looking at fall. Fall is within September. There is this notion that the Fed may have to cut interest rates by September. With this kind of data, the Fed may have to rethink if actually September was right to cut rates. Of course, based on this data, they may want to postpone interest rate cuts till next year. And what does that imply? I told us in previous class that when the interest rates remain high, of course, the currency gets bid, the currency of that nation gets strengthened. Of course, conversely, when interest rates are low, or when central banks begin to cut interest rates, of course, there's this depreciation of that currency, just like we had in the with the Canadian dollar some days ago of that currency. Just like we had in the with the Canadian dollar some days ago, they reduced the interest rate from 5.0 to about 4.75. The same thing applied to the euro. They reduced from 4.50% to about 4.25%. But now, with other central bankers having course based on the data that had been released to reduce interest rates, it was widely expected that the non-farm payroll would have come lower than expected. It was expected that the US would add about 182,000 jobs within the non-farm industry. However, it came better than expected, and even the previous. So it came actually better than the previous. So the data didn't actually give the sufficient reasons for the Fed to consider early rate cuts. And what would this imply to the Euro USD card? The Euro just got some bashing with rate cuts as a result of the ECB policy, and then the USD are not the US policymakers are not considering rate cuts. Of course, USD, you're going to expect USD strength any moment from now. As from next week, you're going to find USD really hitting some very high key levels. Okay, your Bitcoin may just dip a bit. Ethereum may have to return back to about 60 something K. If we had gotten an MPF data that was in line with expectations, of course we may be expecting the crypto market, the altcoins to begin to perform. But with this, of course, it may just have to slow down the bullishness of cryptos and all other altcoins. So for now, you want to be looking at USD strength, sustained USD strength. Okay, just that's exactly the summary of what transpired during the trading session. So I'm going to share with you 2 or 3 strategies you could have easily traded during the NPF. Okay, 2 or 3 strategies. So just stay tuned to my next video. Okay, now ways you could have actually traded the NFP data yesterday. You would have possibly used buy stops and sell stops in advance. I'm going to explain how you're going to use them. Now, buy stops and sell stops, as they are being called, help you anticipate trades in advance. Like, you put your position in anticipation of the direction of the market. Now, as at the time of the release of that data, gold was trading at $2,385 for 1 ounce, right? So it was trading at that point, and as a trader who understands NPF very well, and mind you, NPF or NFP is a very traditionally volatile data. What I mean by that is that whenever it's released, there is this high level volatility, and that's exactly why so many traders anticipate that data. Okay, so what you want to do is, by placing buy and sell stops, you're trying to catch the spike, because there's this spike immediately that data is released. Depending on where you're watching me from where I am, it was released at about 8:30 a.m. in the morning. So let's assume I was actually waiting for 8:30 in the morning. I just placed my buy and sell stops. Now, buy stop, I mean, is I'm going to place an order just above the current level. Like, if at the point of, let's say, about at 8:30 in the morning, so by 8:15 it was trading at $23.85. So I'm going to place a buy stop just above $23.85. Okay, let's say 20 pips above. 20 pips above should be like $2,405. So I place a buy stop. Buy stop simply means, should that data be released at 8:30 and it spikes up bullishly, of course, by the time that spike hits $2,405 or the mark, okay, it's going to trigger a buy order, and then I be in profit with the spike. Okay, the same thing happens to converse situation occurs for the sell stop. Sell stop is you're coming to place a sell stop order just below the current price. Now, the price was at about 2,385 in the morning, and then I place a sell stop. A sell stop simply means you're placing below the current price. So if I still risk about 20 pips, I could take my sell stop at about $2,365. So now I place it. I'm also anticipating that the market could spike up or also spike down. So if it spikes down, it gets to my sell stop, triggers it at $23.65 and takes me down. That is in case it goes that way. So I'm placing both of them in such a way that wherever the spike, the direction of the spike follows, I'm going to be in profit. But you also remember that it's a game of probability too. It's possible it could hit the buy stop and also reverse immediately and pick up your sell stop, and maybe you lose the buy stop but perhaps make money when it had triggered your sell stop. So that's exactly one of the very easy ways to trade the NFP data. You had done that, of course, looking at what gold did yesterday. It went from $2,385 and crashed to about $2,292 as at the close of market yesterday. So if you had placed a sell stop at about 2,365, boom, you're down almost 80 something, or you're down almost 70 pips. I wouldn't say down, you're up. Of course, the market had actually gone down, but you're in profit by about 70 pips. Of course, you should know what it is. If you have actually traded one lot size, 70 pips in the Forex market could easily give you $70,000. And if you trade like one micro lot. Micro lot is the least you could have traded, would have just been $70. So understanding that buy stops and sell stops are key during market releases like this, then it helps you make good profit on your trade. So the next one we're going to be discussing is, follow me in my next